All right, everyone, Marco Palmero, founder of Ulysses in Dubai, and welcome to another episode of Acquisition Case Studies, where we take deals that we have sourced, negotiated in the past, we break them down, we analyze them, we try to find lessons and or mistakes that we have made so that we can then execute better deals in the United Arab Emirates and in the Middle East. As always, this is our proprietary deal flow, so transactions that we negotiated for ourselves as Ulysses or on behalf of our clients, and we keep everything confidential to avoid disclosing any sensitive stuff. Now, in terms of how these videos are structured, I think the goal is to help all these business leaders, entrepreneurs, and investors looking to buy assets in this region and trying to figure out what are some of the challenges, the opportunities, and again, potentially avoid some of the mistakes. So we will share ours so you can be aware of them. I'm sure you are already quite savvy, but when you enter a new region, it is always complex. There are always new dynamics that get involved. So hopefully these videos can help with that. Now, in terms of today's transaction, I want to talk about a deal that gave me a very strong feedback on what the real motivations of sellers are. It kind of showed me what are the best motivators for selling a business and kind of like give me a benchmark to then measure all the other deals against. And I think that is one of the reasons why I wanted to share with you. It's going to be less of a discussion around the financial aspect of the deal, more about the motivation for selling a small business. So as always, let me give you a little background on the deal, and then we will talk about this topic, which I think is very interesting. So this business had been around for about 25 years. So it was a very old business, especially considering that, the United Arab Emirates are a country that is only 50 years old. So a very old business that had about 60 people working in it, with 30 being the money people, the ones that were bringing in the revenue, right? The real estate was part of the deal. So we had a business plus real estate play, and we will see why in a second. The reason why these guys wanted to exit the business was because the company was a family business, and unfortunately, the people in the family who were responsible for running the business on a day-to-day basis passed away. So what happened was the family inherited this business. They didn't know anything about it because they were in completely different sectors, and they had no capability for running the business. They kind of hired an external management firm to take over the business for a little while, but that was just a short-term solution to a long-term problem. So they wanted to get rid of the business, capitalize on the exit, and then focus on something else. So that was fundamentally the reason for the sale. Now, from a financial perspective, the business wasn't doing so well. It was a $7 million a year in revenue business that was almost break even. But again, as I mentioned earlier, I'm not looking at this deal from a financial perspective. I'm looking at it for the motivation standpoint, and to kind of dive a little bit deeper into this concept of motivated seller. I think what struck me at that time when this deal was offered to us was to see how strong the motivation was from the family, let alone the loss of a loved person, which is totally understandable. I think what then became clear to us when we sat down with these people and talked to them was that they really had no clue about what the business was all about, and they wanted to get out as soon as possible and as cleanly as possible. So fundamentally, they wanted an out, they wanted quick, they were willing to be very negotiable on pricing and terms, and fundamentally, they were open to deal and to negotiate with us. Now you might say, well, Marco, that's not big news, right? You say in a lot of your videos that you always look for motivated sellers before you actually engage in any transaction. And yes, that is true, but I think it is important to understand the signals when you talk with people and clearly feel what the other guy is all about and see if he's really motivated. And in this particular case, we kind of got we kind of checked all the boxes, right? It was a slam dunk from the motivation perspective. Not only, again, for the family situation, but because these guys had no clue about what the business was all about. They just wanted to capitalize on these assets while they could still sell them for something, and then be completely out and focus on something else. So I think when we sat down, and of course it's difficult to relate if you didn't sit with me in these talks, but when I talked to them and I saw the emotion and the motivation they had, I clearly understood that this would have been a slam dunk from a deal perspective, because we would have had a party that was very aligned with us, and it wouldn't cause any issue throughout the deal. And I'm not talking about taking advantage of anybody. I'm talking about having somebody who's heavily invested in the deal, which is always one of the key priorities. Now, you might all know that a lot of M&A deals fail, right? That is true. What are some of the reasons why deals fail? Many say because of integration and problems after the transition. That is certainly a reality, but I think a lot of deals fail before they even get to the finish line, because one of the two sides is not really in it fully 100%. And in the case of small businesses, having a motivated seller who's really willing to go all the way is really key, because emotion plays a huge role in a small business transaction more than large deals. And if you have a guy who's unstable, who's not really sure why he wants to sell the business, and he might have afterthoughts in the middle of the transaction, you're going to be in a massive trouble, because these guys can back off at any point in time. You invested time, resources, and money into this deal, and you're left with nothing. So my perspective when doing small business deals is that I always want to be 100% sure that that motivation they got is strong. And in this case, I got that exact feeling, let alone that we didn't pursue the deal because it wasn't a profitable acquisition. But from a qualification standpoint, the seller was checking all the boxes, and it was very, very good. Now, why was it so good? Well, because it gave me a benchmark to compare all the other deals against, right? I think one of the challenges of this region, which can be potentially a teaching point for you or just a suggestion, is that many business owners will entertain the idea of selling the business, even if they have no interest whatsoever of selling it, because everybody here is looking to hit jackpot, especially in the UAE. They think a rich investor is going to come in, buy them out for a handsome multiple, and they're going to have the ability to retire on a tropical island. Of course, we all know that the world works in a different way, but a lot of them believe that, and they will kind of take you for a ride, literally, and try to get the best price out of you. So unless you're able to spot, a suspect from a prospect early on, you're going to waste tons of time, you're going to be mad, and you're going to think everything in this region is messed up. It is much more difficult from my perspective to qualify sellers in this region than it is in Europe or the United States. And I've been in these other countries, so I can attest to that. Because here people are very good at masquerading their motivation, and it's very difficult to dig deeper and find what are the drivers that make them want to sell the business. So having this kind of feedback from these guys really helped me, because again, it gave me a point of reference. Okay, this is what a guy that wants to go all the way looks like. I want to look for similar types of motivation, let alone, again, the family situation. That is tragic. I'm not going to dive into that. I'm talking about pure economic factors and motivation problems. So yeah, it gave me a very good benchmark. And I think many times people enter the market as freshmen, so to speak. So they are coming to UAE and Middle East. They want to acquire assets or set up their own business. They don't know how the environment works, and they get fooled by a lot of people that are not really motivated in selling a business. They're just trying to squeeze every dollar out of them. And that is a challenge that many people face, not only small business owners. I've seen, $100 million companies that were international businesses being fooled by people in the Middle East simply because they didn't have experience in the country. And so they didn't know how to interact with certain people, how to qualify them correctly, and how to find the right ones. And so I think this is a very important aspect of doing deals in this region, especially small, medium-sized ones, because it really is key to find motivated sellers and understand earlier in the process what a motivated seller looks like and what is just a time waster, a tire kicker. And again, it takes time and effort to build that knowledge and expertise, because you got to go through a lot of cases and then benchmark them against each other. You can do that on your own. Again, time, resources, and money that will go into that, or you can work with somebody else who already has the experience on the ground to do that. Many firms that do these things, we can potentially do that as well. Mostly we do deal flow though, so we focus on sourcing, qualifying, and presenting to you the opportunities. We don't take care of legal or financial aspect. But if you're interested in qualifying the good deals and finding the premium gems that are off market, not listed, and that you're sure are going to be motivated, then it is something that we can talk about and we can help you with. Again, this whole case was focused on seller motivation, because I think too many times we read articles in the M&A world that talk about how deals fail because of problems with integration, problems with cultures, and all these sorts of stuff. These articles are fine. They're super good, and they are meant to be read by billion-dollar companies that do these big deals across the world. For companies that operate below the surface, so they do small business deals, medium-sized transactions, there are also other dynamics that get involved. And again, emotion and motivation are a part of it. There's also motivation in big deals, but I think on the small scale, this is particularly relevant because, again, people look at their business as their child. It is something they've built over time. They want to make sure they're doing the right thing. And so ascertaining whether or not this guy is going to go all the way with you is really important to save time, money, resources, human capital, all this sort of stuff. And so this was a huge deal for me, even if, it didn't lead us anywhere, because it told me a very valuable lesson on how to spot the valuable sellers, the motivated sellers here, and then qualify all the others away. So I would encourage you to go down the same path, look at a lot of deals, build the expertise and experience in the region, or find somebody who already has that can help you with the process, because that's going to facilitate the exercise of buying a business by a lot, and you will have much better opportunities on your plate. So hopefully you find this video helpful, and I'll see you in the next case study.